Well, good morning, traders. Welcome to this week's weekly update. Today is Friday, August 18th, 10:30 a.m. Eastern Standard Time. And here we go again, guys. It is really, this is the longest and worst bear market I have been through to date. And I think any of us have been through in crypto. I think this is the longest bear market by record. So we're going to take a look at the charts today. Before I begin, a little housekeeping. All right, I just got served a 24-hour ban by TradingView, I guess for the little social media promotionals. And so in these videos, I'm going to have to cut that out until the end. And somewhere along the line, TradingView viewers, you're gonna be dropped. You guys won't always, actually probably never get the full video. In this case, you'll get the majority of what I'm discussing today regarding our overall macro pictures. But then towards the end, I'm going to go through some of my trades, where I got stopped out on all of my trades, where I re-entered, why I re-entered, and what would cause me to exit again. And we'll go through each one of those trades in the remainder of the video. So TradingView people, you may not be a part of that, but you know where to find me. I'm not even sure if I'm allowed to hint on my TradingView videos. Okay, so Elon sold $373 million worth of Bitcoin. Maybe he found what the true chain is, Bitcoin Cash, and decided he would have no more part of the Bitcoin, I want to say scammery, but don't really know. That's just speculation. We do know that big entities have really become or intertwine themselves in the blockchain space, specifically Bitcoin. And, some of us have known, you've been able to track those wallets way back since 2017. Certainly they're getting much, much better with that enter KYC. And that is why they're doing that. They can associate wallet addresses to identities. And unfortunately, the crypto space is becoming less and less private. The U.S. recently sanctioned a open source mixer. They sanctioned the code. I don't know how or why you can sanction code, but they have done that. So you can't even run Bitcoin transactions through a mixer. So it is harder and harder to become private, and I think the reason the SEC is delaying these ETFs is just to give the surveillance community and technologies more time to really get this under their thumb. And so privacy coins, I believe, will be big in the future, but that is not the topic of this video. Is it really Elon's fault that he crashed crypto, or is there more to it? Well, we kind of had a little bit of a perfect storm here. Elon selling 373 million was definitely a catalyst. I don't know if it was all his fault, though. Maybe, maybe not. There is FUD stating that the SEC will delay Bitcoin ETFs until April of 2024, though I have yet to find a legitimate source that definitively confirms this. Nevertheless, that is rumor adding to the FUD. And then there's the news, the economic data out of China, which is terrible. We have the SEC suing Coinbase and Binance. We have lots of bad news still coming out. And one more thing involving that news. Is the Fed still continuing to threaten rate hikes? All right, so all of this is kind of creating a perfect storm for pullback, and in this case, Bitcoin crash. And then add to that the fact that BlackRock is taking over the world. Obviously, they have many, many resources at their disposal to continue manipulation both in the US stock market, but now in the crypto space as well. All right, so with that said, let's take a look at our charts and see where we go from this most recent crash. We'll start by taking a look, as usual, on these weekly wrap-ups. A look at our DXY, our dollar chart. What is that doing? Where is that going? We'll take a look at the VIX, which of course has spiked tremendously. We'll take a look at the SPY. I think I have a good level where I believe the pullback will pause at least, if not end. All right. And then, of course, we'll jump over to our Bitcoin chart. And this week, we're going to discuss both the daily indications and also we're going to zoom out to the weekly to find out if we can see some clues there. All right. And then with the final part of the video, TradingView people may not be a part of this. We'll take a look at all of my trades, where I got stopped out, where and why I re-entered, and what would cause me to exit once again. All right, so let's get started here. I'm going to zoom right in, and here we have our dollar chart. Let me just zoom it in just a little bit so you can see where we're at. So right there where the black arrow is, that is our current price level, and notice I've got two descending trend lines. All right, so the first one comes back, I started that in November of 2022. I thought initially that was the major trend line. We had touched that trend line 3 times, and then recently we broke through that trend line and up into our next trend line. All right, so this trend line here, I started over in March of 2023, and we touched this one now. This is the 3rd time as well. The big question is, will we collapse from here, or will we continue up? The problem I see with the collapse theory is that we are now above the 200-day moving average, and the dollar continues to surprise us with its strength. One thing I do want to do is zoom back out here and show you, first of all, the RSI is getting into overbought territory. So we have that on the bearish side, and we have the fact that we are above the 200-day on the bullish side. But this is and still remains a classic bear flag. Why is it a classic bear flag? Because over here we spiked, went all the way up to 114, 115, and then just collapsed from there all the way down to a price of 100 on the dollar. And so all of this right here in this wedge is just a classic bear flag. Additionally, on the bearish side is this head and shoulders pattern I've been drawing. All right, so we did collapse below that briefly on the daily chart, but on the weekly we were not able to confirm any move below this neckline. Again, this neckline comes all the way from 1984. Those of you who have been following this video for some time know that. All right, so the dollar right now has mostly bearish indications. All right, outside of the fact that it's above the 200-day on the daily, that's really its only bullish indicator. Everything else, the RSI being near overbought territory, under a major trend line, classic bear flag, and still the head and shoulders pattern remains intact. Even with this latest move up, it's still lower than the last one, which was set at 104. So this is still a legit head and shoulders pattern, and showing me at this time, at this moment in time, that the dollar will continue to get weaker. All right, jumping over to our VIX. Obviously, the VIX has spiked tremendously. Now, the one thing that we have on our side with the VIX, pausing here, is this run up into the 200-day moving average. So we're hitting our heads on that. Along with that, you can see that the RSI is getting into overbought bought territory. So that is setting us up for a pause on this pullback. All right, so now over to the SPY. What am I seeing on the SPY? And this is really the chart that I'm following because all of this spills over into crypto. Though I was not expecting the exaggerated move we got yesterday in the crypto space. And again, a lot of people want to blame that on Elon, and maybe for the most part that might be true. I think, as I've already alluded to, there are many catalysts here that could have caused that or could have helped with that exaggerated move down. All right, so SPY right now, here is where I think we touch and stop. That's 430 on the SPY. Let me zoom in here just a little bit so you can see that. Whoops. All right, move this over. All right, so that's 430 on the SPY. All right, so we hit the top. This channel here is what we have existed in since way back last year, August of last year. So we've been in this channel for a year, and I think we continue in this channel until we hit our final top somewhere along the way. All right, I've been calling for this blow off top for a year and a half now, and it is coming to fruition. This is a little bit of a pullback, and it's to be expected. All right, so we're getting our pullback here, and I'm going to zoom back out because I want you to see something on the RSI as well, a correlation. So when I expect us, and I'm going to draw a vertical line here, when I expect us to touch this support at 430, I am at the same time expecting us to touch this support on our RSI. So this RSI, what I call the touch and go line, comes from March 2021. You guys know what March 2021 was, right? Our COVID crash, all right? Our COVID crisis, when the pandemic began, all right? So that caused the initial crash, and from there we have been on the rise, really. I mean, until this recent pullback. But again, I think the pullback was deserved, and we are on our way to an irrational, unbelievable blow off top. Nobody is going to expect this. People still doubt it to this point. The fact that we have risen since, look at this red arrow here, since October of 2022, when we were at 348 on the SPY, and we're now at 100 points higher on the SPY. The fact that we are still 25% above that low and is not enough for people to still believe that this blow off top is coming. So this is where I think we pause, and this correlates with the data I see on the RSI chart, and that is where the markets will take some pause and decide, do we go further down or do we bounce from here and go up? My bet is on the latter, of course. All right, so now let's jump into our Bitcoin chart. Oh, before I do that, let me just quickly take a peek at our KRE. This is regional banks. This is something interesting. Do you guys see this channel here? All right, right now, today, we are sitting on the 50 moving average, but we're under the 50-day moving average, and we have come down out of this channel, indicating a potential drop down to our major trend line again. The markets are currently following regional banks. All right, so this could be problematic in the future and something we must keep our eyes on. The markets, the U.S. stock markets, will follow this, and of course Bitcoin follows stocks, and of course alts follow Bitcoin. It's all a big whipsaw, basically. We follow the leader right now, that is regional banks, and currently coming down out of this channel. So something to keep our eye on. All right, anyways, moving on to Bitcoin. Here is our daily chart. Okay, I've got all the indicators hidden. 1 second while I pull those up. I'll pull up the relevant indicators first. This is where, all right, so this is the big support, and let me get those indicators up on the RSI as well. This is the big support. I was not expecting I mean, probability was on our side, so I wasn't wrong to make this trade and to be so confident. That was not the problem for sure. Because look at where this RSI was. All right, so this comes all the way from January, I believe, of 2022 when we first started this, making it a strong line of support down here in oversold territory. You don't expect such a strong support to break down in oversold territory. So it wasn't a bad or a wrong trade at all to enter Bitcoin and expect another move up. But nevertheless, I got stopped out just below the 200-day moving average. I told you previously that I'd put my stop there, and I did. I got stopped out somewhere down here. And, fortunate for me, last night I was making a trade on comp, which the rest of you guys will get to see that trade. But I was able to enter back actually right where our price is today. And you can see I have my stops here below this red trend line. We're going to talk about that red trend line in just a second. And I do think that Bitcoin, look at where we are. I mean, it's at 19 in oversold on the RSI and below this strong support. We have not confirmed that break yet. On the daily, you guys know I like to see 3 candles closing below any strong support for confirmation to take place. Additionally, we're going to jump out to the weekly in just a second, but this is not confirmation yet. We won't really have confirmation till Saturday night, maybe Sunday. And on the weekly, we would not have confirmation until not this next week Monday, but the week after that Monday, because that is when the candle closes on these charts. All right, so this still, I am not convinced of this move down. I am not convinced we're going further. We have plenty of strong support, and I want to unhide. I know you guys don't like this. I got a lot of complaints about all of my drawings, but they mean something to me. So I'm going to unhide the rest of my drawings here very quickly, and I want to show you something. All right, so remember when we got our touch, I was calling for this drawback on a neckline here. And what is this neckline from? This comes from I know it's messy, I apologize, a cup and handle pattern right here. All right, so this is the cup, this is the handle. We broke above. The target really is way up here. At around 35 to 37,000. Didn't quite reach that, but maybe we have exhausted our move up at this point in this bear market. Maybe all we could have expected was 31,500. I don't know. It remains to be seen. What I'm getting to here is that if we break this area right here, all right, this is my neckline along with some strong support. If we break that neckline, I will be back out. Do I think we're going to break that? Not a chance, really, because look at this RSI way down below 20. I just don't see it happening, guys. But nevertheless, that is my exit area. If we break down below that neckline again, and you can see I've got my stops down here, then I will definitely exit and reassess. Okay, so now a few things I want to show you on the weekly chart. This is Bitcoin on the weekly before I say goodbye to my TradingView people. First of all, I've got circled here our 50-week support. It could be that we come down and touch that. That it currently sits at 27 or 23,781. So it's possible for a quick wick down. Additionally, you do see somewhat of an M pattern forming here. Now, if this plays out, we could hit the CMA futures gap at 20,000. All right, so that is a possibility. Now, one thing I do, and I have explained already, is, and I'm going to go ahead and say goodbye to the TradingView people. We will, for the rest of you, cover my trades in the last part of this video. But until the next video, see you later, TradingView people. All right, so we have this 200-week moving average. All right, we have not confirmed. You can see that we are actually below this. All right, and I will zoom in here real quickly so you can see that better. I don't know why that pops up every time I zoom in. Anyways, we have broken that 200-week moving average again, but not confirmed. What do we need for confirmation? We need another open and close below then. And on the weekly, it's fine if we just have one candle. On the daily, I like to have 3 because you guys know crypto doesn't close. Crypto never sleeps. All right, so I want to see, and let me just get rid of this circle here real quick so we can see this clear. All right, I just was highlighting the 50-week moving average with that circle. So I want to see us close back above this 200-week moving average, if not this Monday, which is the close of this particular candle. All right. This Monday, this candle closes. I want to see that close back above the 200-week moving average. That 200-week moving average currently sits at 27,430. All right, so I want to see us back above that price either by this Monday or the following Monday after that, which is when the next candle will open and close. All right, so we have some time on this, guys. We have some time, and that's why I'm fairly relaxed, even with this disastrous pullback. I'm fairly relaxed about what I'm seeing on the charts here. All right, let's jump into some of my other trades. But before we do that, guys, now that the TradingView people are off and I don't risk being banned with this promotional piece, if you guys want to catch all of my trades, all of my entries, all of my exits, the website right there is the best, but I have tons of social media channels. And to help me out, it always helps if you give me a quick like, if you subscribe, hit that bell notification, a comment, anything you can do to support the channel, and I can continue to try my best to provide you information like this on technical analysis. All right, now on to some of our trades here. So the first chart here is Ethereum. Where was I stopped out? I was stopped out somewhere just below this pink trend line. And that pink trend line is actually, I believe, a neckline of an inverse head and shoulders pattern. You can see it right there. I'll quickly draw it out for you. Don't want to get too much into that, but the performance on the inverse head and shoulders pattern was somewhat lackluster. All right, so we didn't, like all of these right now, we're not really hitting our target up, and that's because we are in a bear market. So you can still use these patterns to predict targets and such, but remember the bears are still in control in this bear market. Anyways, stopped out of Ethereum here at just below the pink trend line, and we went all the way down. Where I entered is where this green line starts, so I am in the profit somewhere around 1637. All right, so that's Ethereum trade. And where is my target here? My target's still that purple line, somewhere up at that purple line, so somewhere around 2200. Of course, if we move up again, I will begin to take profits along the way. All right, Ape. I am still in Ape. I entered right back in. Why? Because number one, we are in this bullish green channel. This is a bullish indicator right here. Now we are under some major resistance, or some resistance, with this black trend line. But overall, again, I'm looking at the RSI and look at this bullish divergence. All right. So over here in May of 2023, we were at a price of $3.20 some odd cents. But look at the RSI way down here in oversold territory at around 20. And this RSI, this level right here, is bullish divergence for sure, for sure, for sure. And so I am still in my Ape bet. I entered right back in this baby as soon as I got stopped out. Luckily, I was at the computer when all of this crash took place. I feel badly for those of you that follow me and, couldn't jump back in at the prices. I ended up saving money because I got stopped out and bought lower. And I still think that these targets are still, I'm keeping my targets the same, my upper targets the same. I've just lowered my stop limits. All right. And that sounds like a weak proposition, but no, I saved money on the last stop limits. So if we drop again, I'll get stopped out. I'll just take it, because I do believe that this last shakeout was somewhat manipulated. I know that's all speculation at this point, but I just don't see us dropping like I showed you on the BTC chart. This was strong support down here on the RSI, which I don't have pulled up right now. Hang on a second. Let me pull it up. And this is yearly support. Not only did we break that, but we broke that in oversold territory. That is very hard to believe, still hard to believe as I'm looking at it. So probability was on our side, still is on our side. We're very much in oversold territory, and I believe that these are good trades down here. These are good prices, and I just don't see us continuing to sink lower and lower. All right. So next trade here, XRP. All right. So this was another shocker. Again, we have this trend line on our RSI that comes all the way from January of 2022. We touched it 1, 2, 3, 4, 5, 6 times, and every time we bounced from it. And this time we touched it, we broke through it. We are very much in oversold territory. So the odds are still on our side. Yeah, I got stopped out here. I think I got stopped out right where I bought on this one, which was 49 cents, the 200-day moving average, and bought right back in, set my stops lower. My target remains the same on this, guys. All right. So 117. Yes, that's a very high target, but I will be taking profits along the way. All right. Next one was sand, and all of these trades. See the same thing on the RSI, pop, pop, pop every time we touched it. And so I'm taking that bet every time. I don't care that I was wrong this last time. That, in my opinion, was an anomaly. The odds were highly in our favor. The probabilities were on our side. And so you were not wrong to take the trade there. This is just something that... Bitcoin likes to surprise the best of us, and it always has and always will. But that only occurs 10% of the time. The rest of the 90% of the time, if you follow these technicals, you will be a winner. And so I jump right back in. Yes, we are under some resistance here, but again, look at this RSI down into 19 territory. Rarely does any RSI on the daily ever go into that territory. And when it does, you can rest assured odds are on your side. Do I need to repeat myself? Again, Joe was another one, got stopped out under this descending red trend line, and somewhere under, probably right around the price where it's at right now. I was able to buy back in around 22, 23 cents, and my target remains the same. All right, LTC, Litecoin, is one that I was very surprised by, but I mean, this whole crash was a surprise, right? All right, again, you see the RSI trend line coming from, in this case, June of 2022, and ascending along with this black trend line. All right, so my stop out here was just below the red trend line. I stopped out, I think I stopped out at around $74. All right, and you can see where I bought. I re-entered way back down here at $64. That was an important support, and that is an important support. Therefore, I've set my stop limits down here below the red trend line. I will be very, very surprised if Litecoin goes that low. But who knows? This market is really crazy. It's thrown us a ton of curveballs. All right, now let me finish up with my good trade here. That was in comp. All right, so before I realized I was stopped out, I was looking at this chart. I was sitting down here at my desk looking at this chart, saw this head and shoulders, saw that our target down had been reached when we were at that time sitting on or just coming under the 200-day moving average right here. All right. And so I was like, all right, we've reached our head and shoulders target down. We've reached this green rectangle. Price is good. But because the market looks to be flushing, I'm going to set my buy order at 35.55. That's this black level here. We came actually just under that. I think comp came down to 35.43 on the Coinbase chart. So my order was filled. And as soon as we hit that level right there where my buy order was triggered, we started to move back up. We are now back into this rectangle. This is the head and shoulders target down. You're still not wrong to buy here. And my target remains 65.43 on this particular order. All right, so as soon as I bought back in, I was in the profit, and then I realized that all the rest of my alts got stopped out. That's where I had to scramble to get back in at a good price, and have done so. All right, so those of you who are watching this from my site, you will see down below a snippet of my spreadsheet, which links to the spreadsheet. You can follow all my trades there. I have the targets, the stop limits, the percent, I have all the data. All right, and then you can also follow me further down. You'll see the links link, for lack of a better way of saying it, and that gives you a link to my portfolio, my live portfolio on Drops tab, where you can see what my current balance is, and you can see all about my portfolio there as well. All right, and thank you for watching, everybody. I'm going to go ahead and put up my social media stuff one more time, or maybe not. I guess maybe not. Oh, there it is. All right. So you can follow me on any of these sites. Rumble doesn't show up because of the green screen, and Rumble's logo is green, but a lot of you have actually come from Rumble as well, for crazy enough, for whatever reason. Anyways, do whatever you can to promote this content if you find it helpful. If you don't find it helpful, don't give me that like. Don't do the subscribe. Don't do the comment thing. I don't want skewed data. I want to know what is helpful for you and what is not. All right, until the next video, you all, peace.